All right, let's jump right in today. We're taking a deep dive into Anglo American's 2023 Integrated Annual Report, um, really trying to unpack their performance and strategies.
It's a hefty report, a lot to sift through.
Definitely. We're aiming to pull out the most interesting, relevant insights for you all,
Exactly. A lot of folks probably don't have time to wade through the whole thing, so hopefully we can save them some time.
for sure. So to kick things off, maybe you could give us the quick rundown. What's the scope of Anglo American? Just how big are we talking?
Well, they're a global mining giant. No two ways about it. We're talking 60,000 employees and operations all over the map, multiple continents. But one thing that really jumps out from the report is their emphasis on sustainable mining practices.
Right. They talk a lot about that, don't they?
They do. They've set a target to be carbon neutral by 2040. And get this, all their operations in South America are already running on renewable electricity.
Wow, that's pretty impressive. So let's get into the nitty-gritty of their business segments. What are the key areas that are driving their revenue?
Well, they've got a pretty diversified portfolio, which makes sense. Helps to spread the risk in a volatile market like this. Copper is a major player for them, especially with all the talk about decarbonization and the energy transition these days.
Yeah, copper is definitely having a moment.
Definitely is. And their new Quellaveco mine in Peru, that's a good example of their commitment to responsible mining, 100% powered by renewable energy. Plus, they've made significant progress on safety, which is great to see. They've managed to cut their total recordable injury frequency rate by 34%.
That's a big improvement. I did notice in the report they mentioned some potential challenges with declining ore grades at Quellaveco, looking ahead.
Yeah, that's something to keep an eye on for sure. Even with the best tech, you're still dealing with, well, what nature gives you. Declining grades that could impact production volumes, potentially squeeze profitability.
Right. Investors will be watching that closely, I imagine.
Absolutely. Okay, so moving on, you mentioned nickel. It's a critical component in stainless steel, of course. Their nickel operations are mainly in Brazil. They're doing some interesting stuff there with um, innovative leaching processes to extract the metal, more environmentally friendly compared to traditional methods, which again fits with their whole sustainability focus.
Makes sense.
Yeah.
Okay, how about we talk diamonds? Anglo American has that majority stake in De Beers, which is, well, pretty much synonymous with diamonds at this point.
Oh yeah, De Beers is a giant in the industry. And that Venetia Underground project in South Africa, that's a really interesting one. They're shifting from open pit mining to underground, which is it's a massive undertaking, costing them something like $2.3 billion.
Yeah, that's quite the investment.
It is, but it extends the life of the mine all the way to 2045. And they're projecting it could yield up to, wait for it, 80 million carats. It's a
Okay.
long-term play for sure.
No kidding. They're definitely thinking ahead.
They are. And that long-term view is something you see across their different segments, like their platinum group metals business. They're a dominant player in that market. They've got assets like the Bushveld complex in South Africa. That's the largest PGM deposit in the world, by the way.
Wow. Anything else?
Oh, yeah. The Unki mine in Zimbabwe, one of the largest outside of South Africa. And then there's Mogalakwena. That's the only large open pit PGM mine out there. And because of that, they're able to achieve really high profit margins.
So they're really covering all their bases, from
Where?
deep underground to open pit, it sounds like.
They are. And on top of all that, they're also the world's third largest exporter of steelmaking coal, primarily sourcing that from Australia. Essential ingredient in steel production, and demand is still really strong, especially as global regulations push for cleaner steelmaking.
It seems like they have a piece of pretty much every corner of the mining world.
They do. Oh, and before we move on from the business segments, I should mention two more.
Okay, go for it.
First up, iron ore. Their operations there, particularly the Minas Rio complex in Brazil, have been performing quite well. It's a unique setup. It's fully integrated. You've got the mine, a beneficiation plant, and then a 529-kilometer pipeline to get the ore all the way to the port.
Wow, that's quite the operation.
It is, and their safety record there is fantastic. No fatal incidents since 2015.
That's great to hear. Safety should always be the top priority in an industry like this.
Absolutely. And then the last segment to touch on is the Woodsmith project. This one's in the UK and it's still in development. It's a big project focusing on producing polyhalite. That's a natural mineral fertilizer. And it's a good example of their their sustainability push. They're getting 63% of the electricity used there from renewable sources.
So they're really walking the walk when it comes to sustainability.
They are. And it's not just about the environment. They're also focusing on being a responsible corporate citizen in general, investing in communities, promoting diversity and inclusion, really trying to minimize their overall impact.
Yeah, that's good to see. Thinking beyond just the bottom line.
Yeah.
Okay, so we've gotten a good sense of their various business segments. But how did all of that translate into actual financial performance in 2023?
Well, it was a mixed bag, to be honest. They faced some headwinds, particularly in the platinum and diamond markets. A lot of that was due to global economic and geopolitical uncertainty.
Right, right. Kind of a tough year overall.
It was. Their underlying EBITDA, which is, a measure of their core profitability, came in at $6.8 billion. That was down from the previous year. And their attributable free cash flow, well, that actually turned negative.
Negative free cash flow. That's not usually a good sign.
Yeah, it's not ideal. But it's important to understand the context. Their capital expenditures were still quite high at $5.7 billion. A lot of that was related to those big growth projects we were talking about earlier, like Quellaveco and the Woodsmith project.
But they're investing heavily in the future.
Exactly. They're taking a hit on short-term cash flow, but the idea is to fuel future growth and generate value in the long run. It's a calculated risk.
Right. So what about their shareholders? Are they getting anything back in the meantime?
Well, they announced a final dividend of 41 cents per share, which is in line with their policy of paying out 40% of underlying earnings. So, they're still committed to returning value to shareholders, even in a challenging year like this.
Okay, that makes sense. So what were the main drivers behind this financial performance? Was it all just external factors, or were there internal operational challenges as well?
It was a bit of both, actually. External factors like, currency fluctuations and inflation definitely played a role. But there were also some operational hiccups, specifically their Los Bronces copper mine in Chile and the De Beers diamond business. They both experienced lower sales volumes, which had an impact on the overall EBITDA.
So a combination of external pressures and internal challenges.
Yeah, pretty much. It was a bit of a roller coaster year for them.
All right, well, before we get into the nitty-gritty of their financials, let's pause for a moment and hear from you, our listeners. What are your initial thoughts on Anglo American's business segments? Anything that stands out to you as particularly interesting or concerning? And what questions do you have about their performance? Hold on to those thoughts, because when we come back, we'll be taking a deeper dive into their financial statements and exploring their plans for the future. Okay, so we're back, and I want to circle back to that free cash flow situation. Like we said, negative free cash flow. That's not usually a great thing to see.
Yeah, no, it's definitely something that catches your eye when you're looking at the financials.
For sure. So how are they planning to deal with that?
Well, like we touched on earlier, a lot of it stems from their major capital expenditures, those big growth projects they're pursuing, especially Quellaveco and the Woodsmith project. Those are really eating into their cash flow right now.
So it's more of a strategic decision
Yeah.
than a sign of trouble, essentially.
Exactly. It's a classic trade-off, sacrificing short-term cash flow to fuel future growth and enhance long-term value. Only time will tell if it pays off.
Right, right. Okay, let's break down some of their key financial metrics a bit more, starting with the income statement. What can you tell us about that?
Sure. So their revenue actually remained relatively stable, but their underlying EBITDA, which, is a measure of their operating profitability, that dipped to $6.8 billion in 2023.
Okay. And what was driving that decline?
Well, a few things. Lower production volumes in certain segments, for one. And then you've got, inflationary pressures and those always fun currency fluctuations. Kind of a perfect storm, really.
Yeah, sounds like it. Okay, how about their balance sheet? How healthy is their overall financial position?
Well, their balance sheet is still pretty solid. They've got a comfortable level of liquidity, but their net debt did increase a bit, which is something to watch, especially considering those big capital-intensive projects they've got going on.
Right, makes sense. And speaking of those projects, how are they showing up on the cash flow statement?
Well, as we've already discussed, their capital expenditures were pretty substantial, $5.7 billion to be exact, and that obviously contributed to the negative free cash flow. But the key thing to remember is that those investments, they're expected to generate positive returns down the road, eventually improving their cash flow position.
Okay, so it's all about that long game again.
It is long-term thinking for sure.
All right. So we talked about dividends. But are they considering any other options to create shareholder value, like share buybacks, for example?
Yeah, share buybacks. That can be an effective way to return value to shareholders, especially when a company thinks its shares are undervalued. Now, Anglo American, they didn't specifically mention buybacks for 2023, but it's a tool they've used before, and they could certainly revisit it depending on market conditions and their overall financial position.
Okay, so it's potentially on the table.
Exactly. They've got options.
All right. Well, let's shift gears a bit and look ahead. What's your overall assessment of Anglo American's future prospects?
Well, like any company in this space, they're facing a number of challenges. We've talked about declining ore grades, inflationary pressures, and then there's always the geopolitical risks that come with operating in the mining industry. Those never really go away.
Right. But it also seems like they're well positioned to benefit from some key global trends, wouldn't you say?
Oh, absolutely. I mean, the energy transition, that's creating a huge surge in demand for metals like copper. Essential for EVs, renewable energy infrastructure, all that. And Anglo American, with their strong copper portfolio, they're well placed to capitalize on that.
Yeah, and their focus on sustainable mining practices, that could give them a real edge as the world gets more focused on environmental responsibility.
Definitely. Investors are paying more and more attention to ESG factors, and companies with strong credentials in that area are definitely going to attract more interest. So Anglo American's commitment to sustainability, that's a big plus for them.
And their investments in innovation and technology, like that Future Smart Mining program, that's got to count for something, right?
Oh yeah, for sure. They're not just sticking with the old ways of doing things. They're exploring advanced automation, robotics, data analytics, all sorts of things to try and optimize their operations and minimize their environmental impact.
It sounds like they're really trying to push the envelope.
They are. They're trying to stay ahead of the curve because, the mining industry, it's facing a lot of pressure to operate more sustainably. And companies that don't adapt, well, they're going to fall behind.
So a lot of challenges, but also a lot of opportunities.
Exactly. It's an interesting time to be in the mining business, that's for sure.
All right. Well, before we move on to the final part of our deep dive, I want to hear from you, our listeners. What are your thoughts on Anglo American's financial performance and their plans for the future? Are you feeling optimistic or a bit more cautious? Let us know. Okay, so we're back for the final part of our deep dive into Anglo American. As we've been going through all this, one thing that really sticks out to me is their commitment to really doing things differently. It's not just about digging stuff up. They seem to be genuinely pushing to be leaders in sustainable mining.
Yeah, I think you're right. It definitely sets them apart. The mining industry, it doesn't always have the best reputation when it comes to environmental and social impact.
Right, and their focus on innovation is pretty remarkable too. All those Future Smart Mining initiatives.
Yeah.
It feels like they're really trying to push the boundaries of what's possible in the industry.
Yeah, they're exploring a lot of cutting edge stuff, advanced automation, robotics, using data analytics to optimize everything, try to minimize their footprint.
I was reading about their work with coarse particle recovery and hydraulic dewatered stacking. Sounds pretty complex.
It is, but the goal is basically to use low water, improve their tailings management, doing more with less. It's a key part of sustainability.
And then there's that ambitious Woodsmith project that's going to be a major source of polyhalite, right? That natural mineral fertilizer.
Yeah, exactly. It's interesting to see them tapping into that growing demand for sustainable agriculture solutions.
It's like I don't know, it's like they're mining the future, literally and figuratively.
I like that.
Yeah.
Yeah, it's not just about extracting resources, it's about extracting value, but in a way that benefits everyone, shareholders, the planet, the whole deal.
Okay, so as we wrap up this deep dive, what's your final verdict on Anglo American? Company worth watching? Or are the risks just too big?
I mean, it's a company that's definitely worth keeping an eye on, no question. There are challenges for sure. We've talked about them, declining ore grades, all the geopolitical uncertainty, commodity prices always bouncing around.
Right. But it seems like they've got a lot going for them too.
Oh, definitely. They've got a diversified portfolio, they're committed to sustainability, and they're investing heavily in innovation. That puts them in a pretty good position, I think.
Plus, they've got a solid balance sheet
Mm-hmm.
and a history of, delivering returns to shareholders.
Yeah. And they're not afraid to take some risks. I mean, those investments in Quellaveco and Woodsmith, those are big, bold bets.
So for investors who are comfortable with a bit of risk and who are thinking long term, Anglo American could be a really interesting opportunity.
Yeah, I think that's a fair assessment. It's a company that's, it's not just riding the wave of these global trends, they're actually trying to shape them.
Well said.
Yeah.
All right, well, that brings us to the end of our deep dive into Anglo American. Hopefully, you found it insightful.
We definitely encourage you to check out their full 2023 integrated annual report if you want to really get into the weeds.
Yeah, lots of good stuff in there. And as always, we want to hear from you, our listeners. What are your thoughts on Anglo American? What other companies or industries would you like us to deep dive into in the future? Let us know. And until next time, keep exploring, keep learning, and keep diving deep.